Any bright news for the agricultural people here, Jeff, looking around the world this week?
Well, plenty of rain down in Gisborne.
Absolutely.
No, not off the top of my head. I mean, it's just steady as she goes. I mean, there's a lot of things happening out there, but we're in a good spot. I mean, we're still fortunate that our nearest neighbour is doing it well, Australia, and China's one of their bigger export markets. So if we were positioned closer to Europe, we would find things a lot tougher than we do at the moment. I mean, you're looking at Spain with, 20% unemployed, the youth unemployment rate's 35%. They've all got austerity budgets. I mean, they're in a totally different space to us. So we should be happy, and hopefully we get a win on the weekend.
Yeah, that'd be nice. All right, gentlemen, thank you so much. I've enjoyed speaking with you. Stand by. We'll come back. Well, some pretty hefty topics in there, which won't be going away over the next possibly 1 to 2 years, according to James. Up next, we ask our guests where to from here, and we talk about BP. What's happening with the oil giant? Welcome back. Well, gentlemen, I wanted to ask you about what the heck's going on with BP. It looks like there may be a takeover.
I guess in this kind of a market, there's just an awful lot of speculation, a lot of loose talk. Takeover is one of the things that people are talking about. There's also BP are talking to a consortium of banks to raise $9 billion loan to help them fund the cleanup. And then don't forget, I mean, they're not the only company liable, so there's going to be litigation and insurance claims against the other people involved in it. And I think they're also talking to the Abu Dhabi government about taking a stake in BP. So they're looking at various options, and certainly the share price has picked up from its low last week.
Yeah.
It's around $29. It got down to $27.5 last week, but I mean, we're off from $60 earlier this year.
Yeah, that's right. That's right. In terms of the British government, is there anything that they can do?
I think it's of interest actually that the British government are cutting back spending and trying to tweak the taxes and things like that to pull back their budget deficits. And of course, BP, British-run company, when they're making money, they pay a lot of taxes. So this whole thing, the numbers that I've seen is sort of a $6 billion hole in the UK's tax regime, and that has a big impact on their overall sort of economy. Pensioners, of course, hold a lot of shares. So the fact we talk about BP and the environmental consequences, but it has a big consequence also on the UK economy. The fact that they're going through this litigation and they're spending a lot of money.
In terms of strategic investors, who would want to take BP on at this point? Would you do it if you had the money?
I guess there's a big liability out there. There's a big liability out there. I mean, they were going to plug the hole a few months ago. Haven't been able to do it yet. They keep bleeding money every day, and when's that going to happen? It'd be you'd want to understand those risks before investing.
Jeff, have you actually put some money into BP?
I did.
Tell us about it.
No, it was just a punt, really. I just figured that it'd been beaten up so badly, and that it may not be as bad as people are picking. I mean, so it was just a punt from my punting fund.
All right. How have the shares been doing?
I thought I'd start buying it, in $27 something. If they went any lower, I might buy some more. But they've actually gone the other way now. As you say, people are talking about takeover or, injecting more money into the company. So that seems to have helped in the short term.
Yeah, well, listen, I'd hold on to your wallet for a while if I were you, but just a tip. Yeah, at least we've declared your interest.
I know, but I used to have dark hair.
Yeah, that's right. Overnight, you're the silver fox. Yeah. All right, what else is going on in the week coming up? What are you going to be watching for, James?
Well, it's going to be quite important in the US market over the next week or two. Last week, the House of Representatives put through their financial regulations bill, and that's going to see some quite widespread changes to the finance industry in the US. And of course, last week we did see the financial services index drop in the US market, because there's a few fears that profitability is going to drop down. Some of the investment banks are perhaps not going to be able to trade as much as they previously have been. Private equity and hedge funds are going to have to start disclosing what they've been doing. There's going to be banks going to have to hold more capital all those sorts of things. So it's going to have some pretty big impacts on equity markets in the US potentially, and of course the banking sector. That could also flow through to European banking sector, and of course us here in New Zealand. Reserve Bank's already been talking about higher capital ratios and things like that. So, I wouldn't be surprised at a bit more pressure from the US, and that'll come back to us here in New Zealand.
Jeff, what are you predicting is going to happen here in this part of the world as a result of the tougher financial regulations in the Americans?
I don't think we'll notice it so much here. I mean, most of the damage happened in the US and happened in Europe. I mean, we had our banking crisis 20 years ago, and we're largely owned by the Australian banks, and they've got a pretty good regime in place. So I don't see a lot of changes here. But as James said, when people like Goldman Sachs aren't able to do not in-house trading, but proprietary trading on their own account, that gets scaled back. Their profitability is going to drop. So, but that's largely factored into the prices anyway. I mean, I haven't read the 2,300-page bill, but it's good. I mean, consumers will get a lot more protection. Hopefully, you won't end up in a situation when you have banks that are too big to fail. Generally, that was the missing ingredient in the financial meltdown over the past 20 years. We've moved away, and there's been little or no regulation in some areas, and so sometimes it overdoes it the other way. So,
yeah, and a key thing is that the US banking sector is quite different to the banking sector here, as Jeff sort of pointed out. Then the US banking sector, they have been perhaps taking a few more risks in terms of trading on their own balance sheets, shares and riskier positions, and New Zealand banks have stayed clear of that. And so the changes for us here in New Zealand are going to be probably more around capital requirements as opposed to the larger and more fundamental changes in terms of taking risks that the US banks are probably going to be adhering to from future.
Terrific. Well, that's all we've got time for. Not bad. Around the world in 30 minutes. Thanks to my guests, rural economist James Shortall from ASB and Jeff Matthews from Spicers. As for you, we love your feedback, so please go to our website and drop us a line. Be sure to check out my weekly blog, too. And remember, as one economy watcher once said, experts can prattle on about money and economic theory all they want. But let's face it, we are the economy. So keep the faith. We'll see you next week.